US at war? Crypto down? But don't panic yet. War is horrible, but I'm not here to take sides or sensationalize. I'm here to help you look beyond the headlines so you can understand the market and make smarter decisions for yourself and your portfolio. And here is one of the most important lessons in trading. Divorce yourself from the news. Most news is negative. Fear sells. And in many cases, it's not about helping you, it's about shaking out small traders and triggering emotional decisions. The truth is, news creates fear and bias, not strategy. Trading on emotion or headlines alone, that's dangerous. Fear sells headlines, not profitable trades. So, today, let's stay focused on what really matters. Data and market structure. That said, this past weekend was anything but peaceful in the crypto world. Bitcoin broke below the key $100,000 level, even if it's bounced back above it at the time of this video. So, of course, the big question is this the beginning of a crash? Or is it just another correction before we head higher? Bitcoin took a hit as tensions between the US and Iran suddenly escalated. And just as things were calming down, the market got rattled again. This time by fears of a possible blockade in the Strait of Hormuz. It's a tense situation and the market is reacting fast. I'm Neil, and in today's video, we are breaking it all down into 4 key parts. The Heatmap and Wells movements, what's really going on between the US and Iran, how Bitcoin and other assets are reacting, what the on-chain data is telling us. So, let's dive in. Let's kick things off with the Heatmap and take a look at what the market is showing us. The session started around 102.2k, and for a while, the price moved sideways, stuck in a tight range. On the upside, there were short liquidation zones stacked between 103.2k and 103.8k, and on the downside, long liquidations were waiting between 101.8k and 101.1k. Then the crash happened. And it wasn't small. The price broke through multiple layers of long liquidation zones, falling from 101.8k all the way down to 100.3k. Even the solid support line at 101.6k couldn't hold it. There was a tiny rebound at 100.3k, but it didn't last. Buyers weren't confident, and the price dropped again, this time all the way to 98.6k. You might think, okay, surely that was the bottom. Well, not yet. After briefly bouncing back above 100k, the price collapsed again, dropping to a new low of 98.1k, clearing out even more liquidations between 98.6k and 98.1k, most likely triggered by the US strikes on Iran. More on that in a moment. But this time, something changed. The support at that level held strong and the price rebounded, climbing back over the 100k line up to 101k and eventually piercing through resistance at 101.6k. That move wiped out a lot of the short liquidation zones above. After that, we saw another dip and some stabilization. As of the time of this video, Bitcoin is trading around 101.2k. Now, let's zoom in on the liquidation zones. On the upside, there's a heavy wall of short liquidations stacked all the way up to 105k. That's going to be a tough zone to break through. Now, let's flip the view and look below. There is immediate support at 100.3k, highlighted in yellow. Then, we have 2 more support levels at 99.3k and 99k. And if the price drops further, there is a big cluster of long liquidations waiting from 98.5k down to 95.5k. That era could act as a strong cushion if things turn bearish again. Alright, Heatmap's done. Now let's see what the whales are doing behind the scenes. We are looking at the CVD data, which basically shows us who's buying and selling, especially the big players. Right now, there is still a heavy selling wall sitting near the 110k level. It's been here for a while and hasn't really moved. Now, let's talk about the whales. We will start with the mega whales. These are the ones making trades between 1 million and 10 million USD. On the chart, they show up as the brown line. And what are they doing? Not much. They are kind of just sitting back, watching the markets. A few of them are buying here and there, but definitely not selling in force. Now, the next group down. The second, third, and fourth largest players. Those are the violet, red, and green lines. They are selling steadily, quietly, but clearly in sell mode. And then there is the smallest group, the orange line, the shrimps or small retail traders. They have been going hard on the buy button, see that? Lots of volume. They are the ones showing the most confidence right now, while the others are selling. So, in simple terms, the biggest whales, waiting. Mid-sized whales, selling. Small traders, buying. So, here's what went down over the weekend. And yeah, it was a big deal. President Trump approved airstrikes on major Iranian nuclear sites, including Fordo and Natanz. These weren't just warning shots or symbolic gestures. This was real. Iran even confirmed the strikes through their own media, although they are claiming their nuclear materials had already been moved elsewhere. Now, just to put this into perspective, the US hasn't launched a direct military strike inside Iran since 1988. And even back then, the US said it was a mistake. So this is historic and serious. What's the US aiming for? It looks like two big goals: stopping Iran's nuclear program and shifting power in the Middle East toward Israel and Saudi Arabia. But Iran's not just taking the hit quietly. They are already responding with missile launches and openly saying they won't stop their nuclear program. And here's the part that's really shaking the markets. Iran's parliament is now considering a formal blockade of the Strait of Hormuz. This is a tiny but critical waterway that handles about 25% of global oil and 20% of natural gas exports. If that strait gets blocked, even temporarily, oil prices could skyrocket, shipping costs would explode, and the global economy could take a huge hit. And just the fear of that happening, it's already having an impact. We saw crypto prices, including Bitcoin, take a sharp dip as the news broke. The markets are clearly nervous. And when oil, war, and uncertainty come together, volatility follows. So, what happened in the markets? Bitcoin dropped hard, briefly falling below the 100k level and touching the 99k range, a level we hadn't seen in over 45 days. And even though it bounced back quickly, that drop was enough to trigger a wave of liquidations. In just 24 hours, more than $1 billion USD worth of long positions were wiped out. That's over 240,000 traders gone just like that. And the pain didn't stop with crypto. Traditional markets opened with major volatility as investors tried to make sense of the situation, especially with the UN Security Council holding an emergency meeting as we speak. Meanwhile, on the US side, President Trump is pressuring the Fed to cut interest rates. But Fed officials like Jerome Powell and Christopher Waller are sending mixed signals. Now, here's the twist. Waller, who's usually known as a hawk, someone who favors tighter policy, is suddenly talking like a dove. He's even hinting at a possible rate cut in July. That's a big shift. And if that weren't enough, there's more macro pressure building. The tariff grace period between the US and China ends on July 8th. If Congress doesn't rise the debt ceiling, the US could technically default by mid-July. Yeah, it's not just geopolitics. We are heading into a macro minefield. All of this is weighing heavily on market sentiments, and you can see that in the data. Fear is back, but not for everyone. Because while retail traders are panicking and getting liquidated, the whales are not. Michael Saylor, yes, again, made it clear he's not slowing down. He said he plans to keep buying more Bitcoin, surprise, surprise. And get this. Meta Planets, Japan's MicroStrategy, just announced it bought 1,111 Bitcoin for about 118.2 million USD, at an average of $106,408 per coin. Their total holdings now? 11,111 Bitcoins purchased for just over 1.7 billion USD, with an average entry at $95,869. That's a 300% gain based on their Bitcoin holdings compared to their average buy price. Pretty solid for just half a year. So no, don't panic. The smart money is still buying. Let's turn to the on-chain data, and it's giving us some very important clues. First, demand momentum has dropped sharply. We saw an estimated drop in buying demand equivalent to about 2 million Bitcoin. the largest decrease in net interest ever recorded. New buyers are slowing down, and even big players like ETFs and whales have reduced their buying volume by half. On April 23rd, US ETFs were buying over 97,000 Bitcoin daily. Now it's down to just 33,000. But, interestingly, the Coinbase Premium Index is still positive, meaning US institutions are quietly buying the dip. Another key metric? Volatility. Bitcoin's volatility is now at its lowest point since early 2023. That often happens before a major move, up or down. And when we look at leverage, we see something interesting. The estimated leverage ratio is near historic lows, even lower than during China's mining ban in 2021. What does that tell us? Investors are avoiding risk, and there's a lot less hot money in the system. This often means undervaluation. Even though we are seeing short-term fear and selling, the long-term structure, especially among institutions, is quietly solidifying. And sentiment indicators like the Fear and Greed Index and FOMO Finder are flashing fear and panic, not euphoria. Guess what? That's a good sign for bulls. Major bottoms usually form during peak fear, not during optimism. But again, it's all potential. We are still waiting on confirmation. So, what's the bottom line? We are in the middle of serious global tension, and the markets are feeling it. But here's what matters. On-chain data shows Bitcoin is likely undervalued. Momentum has slowed, but smart money isn't backing down. The next big moves hinge on geopolitical shifts and key US economic decisions coming in July. So no, this isn't the time to panic. It's the time to stay calm, stay informed, and stick to your strategy. If today's video helped you make sense of the chaos, drop a like, leave a comment, and subscribe for more updates. And make sure you turn on notifications so you don't miss what happens next. Stay safe, stay sharp, stay safe. I'm Neil, and I will see you in the next one. Bye bye.